Hello students, in present video I am going to explain about company liquidation topic, second problem. I am taking this question from Punkaj publications book. On liquidation of companies topic, till now I made 5 videos. Video links are available in the description box. See the question. Exxon Company Limited is to be liquidated, means company is going to be closed. Their summarized balance sheet as on 30th September 2010 appear as under. Balance sheet is given. Below to that some additional information. Finally, prepare the statement of affairs. This is a question. This is a solution. Heading: Exxon Company Limited statement of affairs as on 30 September 2010. Particulars: amount. When company is closed, company shareholders and creditors appoint one liquidator to take care of this liquidation process. Liquidator's duty is company assets he has to sell. With that sales proceeds, he has to settle to company creditors. Now, liquidator doesn't know about company assets and liabilities information. No? Board of directors, they prepare this statement of affairs and they submit this report to liquidator. Statement of affairs we have to prepare as per the pro forma given in Companies Act. So this is the format of statement of affairs. So this document contains lists. So list A to list H. First list A is what? Assets not specifically pledged. And here estimated realizable value. So pledging means what? Giving to creditor as a security. What is the meaning of this? Company takes loans from creditors, no? So some assets will be pledged by the company to those creditors. So these assets come under list B, assets specifically pledged. And the assets which are not given to any creditors in the form of security, we have to show under list A. In balance sheet, we can see some assets now. First one, land and buildings. Liability side, secured debentures on land and buildings. What is the meaning of this? Company has taken loan from public in the form of debentures. And again security, company has given land and building to debenture holders. So land and building asset is given to creditors in the form of security. No? Therefore land and building asset comes under list B. Other fixed assets. So on these other fixed assets, there is no other information. Means what? These fixed assets are not given to anybody in the form of security. So they come under list A. Next, current assets. For current assets also no further information. Therefore, current assets also come under list A. Profit and loss account. So balance sheet asset side when profit and loss account is given, then the meaning is profit and loss account debit balance is showing under asset side. This is called fictitious asset. Fictitious assets we need not to show under list A or list B. Therefore, ignore this. So two assets we have for list A. Other fixed assets, current assets. So while mentioning them, we have to follow liquidity order. Current assets we can convert into cash form within a short period. And fixed assets, if you want to convert them in cash form, it takes some time. Therefore, current assets are having more liquidity when compared with the fixed assets. Therefore, first current assets we have to mention. In balance sheet, current asset value is given as 45 lakh. No? This is known as book value. So book values we should not show here. See the heading, estimated realizable value. Means what? If liquidator sells these assets in the market, then how much money is going to come? That value we should show here. That information is given here. See, on investigation, it is found that the contingent liabilities are certain to devolve and that the assets are likely to be realized as follows. So when assets are sold, how much money will be realized? How much money will be collected? Current assets market value is 35 lakh. So this 35 lakh we have to show here. Next asset, other fixed assets. So other fixed assets book value is 20 lakh, but market value is 18 lakh. This 18 lakh we have to show here. These two assets come under list A. Total 53 lakh. Now come to list B. Assets specially pledged as per list B. So here 5 columns we have to open. First column contains asset name, which is given to creditor as a security. Land and building is given to debenture holders as a security now. Therefore in first column write down land and buildings. And second column heading is estimated realizable value. See here, land and building book value is 5 lakh. In additional information, its realizable value is 11 lakh. Market values only we have to show here now. Therefore, show 11 lakh rupees. Third column, due to secured creditors. So, who are secured creditors here? Debenture holders. To them, how much money company has to pay? 10 lakh rupees. So, debenture holders due amount is 10 lakh. Next come to fourth column. Deficiency ranking as unsecured creditors. For example, this amount is higher than this amount. Then the difference in fourth column we should write. Then the same amount under list E again we have to show. But here asset estimated realizable value is more than creditor value, no? Therefore the difference we should not show in fourth column, we have to write in fifth column. Fifth column heading surplus carried to last column. Last column means this outer column. So 11 lakh minus 10 lakh, 1 lakh rupee. That amount write in outer column. So for this 1 lakh rupee what to write? Estimated surplus from asset specifically pledged. So specifically pledged asset is 11 lakh rupee. In that, suppose company failed to clear debenture holders claims. Then by selling this asset, company can pay 10 lakh rupees to debenture holders. Then remaining amount is 1 lakh now. So after clearing creditors claims, there is a surplus of 1 lakh rupee. That amount appears here. In inner column, we have to show the summary of gross assets. So this is net asset value because our assumption is in 11 lakh rupee to debenture holders if 10 lakh is paid, then remaining surplus will be 1 lakh. By taking this 1 lakh rupee into consideration, we have calculated this 54 lakh now. Suppose company cleared this debenture holders dues, then this asset also will be with the company only now to clear the claims of creditors. So this 11 lakh is known as gross value of asset now. Similarly, this 53 lakh is also gross value of these two assets. So by taking these gross values, again we have to show the asset information in the inner column. Gross realizable value of assets specifically pledged. First, land and building. Gross value is 11 lakh rupee. Other assets, list A assets, 53 lakh rupees. Total is 64 lakh rupee. Gross assets total value is 64 lakh. Next, these two amounts you have to add. 54 lakh. So this 54 lakh is known as estimated total assets available for preferential creditors, creditors secured by floating charge and unsecured creditors. So liquidator, when he sells these assets, how much money will come? 54 lakh. So this 54 lakh is to be utilized by the liquidator to clear the claims of creditors. No? So three types of creditors he is mentioning. Preferential creditors, creditors secured by floating charge and unsecured creditors. So these three amounts we have to pay by using this 54 lakh rupees. Liabilities to be deducted from surplus or added to deficiency. Two amount columns. Gross liabilities left side and right side this amount column continuation. First, secured creditors as per list B to the extent to which claims are estimated to be covered by assets specifically pledged. What is the meaning of this? Under assets information, we have shown this now, land and buildings details. This amounts again we have to show here. Land and building is given to debenture holders as a security. Therefore, secured debentures come under this category. And to debenture holders, how much money company has to pay? 10 lakh rupees. That value here. This 10 lakh rupee we should not show in this amount column because after subtracting the 10 lakh, remaining 1 lakh only we have taken and we have calculated 54 lakh now. Means while taking this 54 lakh, already this 10 lakh is subtracted. Therefore, from this asset sale proceedings amount, again we should not subtract this 10 lakh rupee. Next, preferential creditors as per list C. Preferential creditors means what? Even though security is not given to them, while clearing the loan amounts, liquidator has to give preference to them. Who are they? Creditors for all these expenses. Preferential creditors are government taxes. Means what? If any government tax due is there, so that the loan comes under preferential creditor. Salaries and wages to employees, leave encashment, outstanding employer ESI contribution, outstanding workman compensation, outstanding provident fund, gratuity fund, staff welfare fund, expenses of investigation. If these amounts are given, if these loans are given, they come under preferential creditors. In question, there is one preferential credit. See, contingent liabilities are for bills discounted 1 lakh rupee, for excise duty demands 1,50,000. Here excise duty comes under government tax now. So we have to pay that. It is a liability. It comes under preferential creditor. Excise duty. In first column 1,50,000. In third column also I can write down that. Next. From this 54 lakh, 1,50,000 we have to subtract. Then the remaining amount is 52,50,000. Next, creditor secured by floating charge as per list D. What is the meaning of floating charge? Once you see these debenture holders, to debenture holders, company has given land and building as security. If company fails to clear their claims, there is one particular asset as a security to them. By selling this asset, they can get back their amounts due. If company fails to clear their loan, creditor can sell any one asset of this and he can get back his money. Means a particular asset is not given to them in the form of security, So these creditors come under creditors who are having floating charge. And in question, there is no information about that type of creditors. Therefore, under list D, nothing is there. So floating charge creditors come under list D. In present problem, amount is nil. Next come to list E. Unsecured creditors. Means company has taken loan from them. For that loan, company has not given any security to them. These type of creditors come under list E. Who are they? See the balance sheet liability side. Unsecured loans 20 lakh. He is only giving, there is no security against this loan. So they come under list E. Unsecured loans. In inner column 20 lakh rupee. In first column also 20 lakh rupee. Next one. Trade creditors. So about this trade creditor, there is no other information. Therefore, meaning is company has not given any asset to them as a security. So they come under unsecured creditors. Trade creditors amount 35 lakh here and here. Next, contingent liabilities are for bill discounted 1 lakh rupee. So company has some bills of exchanges. So they need money before the due date of that bill. Therefore, company sold them to bank. On the due date, if bank goes to drawee and if drawee honors the bill, then company need not to pay these amounts to bank. Suppose drawee dishonored this bill, then who will become next responsible person? Company only. So in the case of discounted bill dishonor, company has to clear this due amounts to bankers. Therefore, this loan comes under contingent liability. Contingent means what? May or may not. So that amount may become a liability or not. For this 1 lakh rupee also, there is no security now. Therefore, this loan comes under list E. Liability on bills discounted, this 1 lakh rupee. Here and here. Finally, all these amounts total 67,50,000. And here, these three amounts total in outer column 56 lakh, and 56 lakh is higher than 52,50,000. What is the meaning of that? In asset sale proceeds with the liquidator, now how much money he has? 52,50,000. But to this list E creditors, how much liquidator has to pay? 56 lakh. So there is no enough money to clear the claims of list E creditors. Therefore, there is a deficiency. 56 lakh minus 52 lakh 50,000, 3 lakh 50,000. For this, what to write? Estimated deficiency as regards creditors being the difference between gross liabilities and gross assets. In previous problem, first problem, list E creditors total is less than this amount, no? Therefore, surplus came. So how this 2,50,000 came? Gross assets minus gross liability. This is gross asset, this is gross liability. But if you see this second problem, list E creditors total is higher than this value. Therefore, here also instead of gross assets minus gross liabilities, we have written gross liabilities 56 lakh minus gross assets 52 lakh 50,000. So if deficiency comes, we have to change the words like this. After list E, actually list F we have to show now, but list F is related with the preference shares. In question, under liability side, there is no preference share information. Therefore, list F we need not to write. Directly list G. So list G is related with equity shares. In question, equity shareholders information is available now. 2,50,000 equity shares of 10 rupees each, 25 lakh rupees. Issued and paid up capital 2,50,000 equity shares of 10 rupees each. 2,50,000 into 10 rupees equal 25 lakh. So this is as per list G. Suppose this is surplus value. Then from this value we have to subtract this. But this is deficit value, no? Therefore to this value 25 lakh we have to add. Then 28 lakh 50,000. This is what finally deficiency only. So estimated deficiency as regards members. Members means who? Contributories. So as per which list? List H. So this is the end of present problem. Take a screenshot of this. Continuation. Next page. Continuation. This is the end of present video. Hope this video is helpful to you. Thank you.